What's up, Tim Sykes, millionaire mentor and trader here. In this video, I'm gonna go over why I buy fundamentally flawed companies over quality companies. I know it sounds crazy. People wanna buy quality companies, right? Companies with good earnings, good revenues, good prospects. I find that the worst fundamentally flawed companies either go up because of stock promotion, which right now in 2023 has taken a back seat, or because of short selling. And right now there's a lot of short sellers. I'm partly to blame because a lot of my top students are short sellers, but I don't short sell anymore because short selling is very crowded. And because there's so many short sellers and they crowd out basically each other and they all groupthink and they all trade the same, it creates great short squeezes and creates great squeezability. And this is a big thing. Like, I just want to be in stocks that can spike. I don't care about their long-term, values. I don't care about like if they're going to go bankrupt in the long run. Most of the companies that I trade, they do go bankrupt or their stocks drop 90, 95, 100%. I don't care. I'm not investing in the long term. I just want to see how much they can spike. And short sellers right now are the new promoters, inadvertently creating great squeezes. So in this video, I talk about the stock that I'm in over the weekend because it's a great short squeeze candidate, and I explain why, versus a stock that similarly has dropped a lot, similarly could bounce, but it has better fundamentals and it doesn't have as many short sellers. So when in doubt, I go with the stocks that are heavily shorted that can spike very fast. Watch this video and check out and see the differences. It's very important you learn this, especially right now in 2023. Hey, Tim Sykes here. I hope you're having a good weekend. Want to do a video lesson on my over the weekend trade in Tupperware. This was one of the most recent multi-day runners. I always say focus on these multi-day runners because they can run again. It's very difficult for a stock to run for the first time. You have much greater predictability with these multi-day runners. Tupperware also has become a meme stock. So it's all over Reddit, it's all over social media. And that is what was, a big part of it spiking from 80 cents up to $2. 2.5 times in just a few days. And then because it was up basically for no reason, just because of the momentum crowd, that brought in a lot of short sellers. But as we've been seeing, a lot of short sellers are untrained, they're over aggressive, and they're just shorting anything because they think that it's going to go back, down. And they short too soon and they inadvertently get squeezed and push the stocks up. They're literally the new penny stock promoters. Inadvertently, the short sellers don't want it to go up, but because so many of them are trying to push it down, they squeeze each other out and they actually push it up. That said, as you can see here, the big run up can only last so long. I mean, this is up 7 times in just a few days. And then when the volume fades, when the initial short sellers get squeezed out, it actually does crash. So I see both sides. Remember, I've made millions going long, I've made millions going short. I don't short right now because I think it's a very crowded strategy. I think it's very difficult for newbies, to take low risk adjusted trades. Even though this does go down eventually, you can't necessarily know when it's going to crash and you can't time it and you can't really keep adding to your position if you're a newbie. If you talk to my millionaire students, they're shorting because they have millions of dollars and they have know-how, they have experience, so they can outlast the squeezes. And, a lot of the time this stuff does actually start crashing. So that's the story. Why am I saying all this? Why am I in this stock right now? Because over the weekend, I have a position because we just had a first green day on Friday. The stock has dropped more than 50%. Also, just from 50% off the highs, it's really difficult for a stock, to drop 4 red days in a row. You can see here, this was, 4 red days and I had a little green day and a little failed bounce. And then you have 3 red days. And now the question is this a lasting bounce? Is this going to be a failed bounce? You never know 100% of the time. But I like it when it's already had a panic, a failed bounce, and then the second one, because a lot of people tried to buy this dip right in here in the mid 3s. And if you are looking at a dip buy, you want that first round of dip buyers to get crushed. Just like if I'm dip buying something into true panic, I want all the panickers out. I want all the weak hands out because then theoretically there's a more solid base. So when you have this failed bounce one time and then you have 3 red days in a row afterwards, not to mention the overall market has been tanking, this is near best case scenario for bottoming type price action. And then on the day also, you have to look intraday. That's the daily chart. But intraday, you had this stock. Let's look at a 2-day chart. Just so you can see, this was downtrending rather gradually. Even on Thursday, it tried, or actually this is Friday morning pre-market. Friday morning pre-market, it tried twice to spike and it failed both times. So any dip buyers from the previous few days have been wiped out. Any potential buyers in the morning pre-market, whether they got in on this one a little too soon and then it failed, or whether they got in on this one and it failed. You have multiple groups trying to dip buy this and all of them failing. And so that creates, I think, what is probably like the best case scenario, for a giant panic. And that's what leads to the actual bottom. There's also, one more group that allows this short squeeze and this bounce to happen. You can see here when it really does start to squeeze for a third time on the day, and you can see this kind of stutter step. This lures in some more over aggressive short sellers. So all of this, you have over aggressive dip buyers getting crushed. Eventually they just stop dip buying, and that's when you actually get full capitulation. Here, you get a third spike on the day, and remember, the first 2 spikes intraday both failed. So then you have a third spike, and some over aggressive short sellers might think, third time's the charm, it's going to come back down. And this little, stutter step here, right where it starts to come down, lures in those short sellers. And that leads to a second round of spiking. And this is what really creates a short squeeze. Then that's interesting, but a lot of these morning spikes fail. I really like that it held this level all day. Remember, it came all the way down here to like 2.1. I was looking for it. I would love it to go below 2. The lower the better for me when I'm dip buying. But it held 2. Then you get the morning short squeeze and spike, and it's holding near its highs. The day high is in the 270s, and it's holding near the highs. So now the question is, why do I have an over the weekend trade? Because it's bottoming on a daily basis, and I think it's bottoming out intraday. And it's really not going to take too much, to really potentially squeeze again. Like this squeeze was from 210 all the way up to 275. Let's do some math here, kids. 2.75 minus 2.1 divided by 2.1. So this is a 30% run up in basically an hour. So it has that upside potential again because it's a former runner. There's no specific news. Most of my over the weekend plays it's with news, it's with a catalyst. This is more of a price action play. But the question is, can it get back to the 270s? And if it does get back to the 270s, can it then spike very quickly even more? Because then it would be a confirmed first day, and I would love to sell my position from 250 into the, whether it's the 275 range or the 3s. I'll be watching. Hopefully it can get back to the 270s. And then the question is, what will it do at the 270s? It might double top at 270. I'm still not convinced that the overall market has bottomed, but Friday was a good start. The NASDAQ has been getting hit hard in the past few weeks, 10% drop off the highs in just 2 weeks. So I'm looking at this stock intraday. I'm looking at this stock daily. I'm looking at the NASDAQ intraday and daily. And there's a good odds, I could say, that, we're at a short-term bottom. And the question is then, how much can we bounce? And which stocks are going to bounce first? There's a lot of plays where they've been hit hard, but they don't show great signs of really bouncing. RXRX is another one that I've been watching. They had NVIDIA invest in them just a few weeks ago, and it was a huge win for them. They got $50 million from NVIDIA, which is arguably the hottest company in the world. AI medicine. Sounds like a lot of potential. But aside from that first spike with NVIDIA and then a second follow-up spike, it's just been going down so gradually. So this is a former runner too, but it's very different, right? Like not all runners are the same. RXRX spiked in reaction to NVIDIA, and then it tried a little short squeeze, but this is the problem with technical analysis. A lot of people say, okay, just buy technical breakouts. Well, this is a technical breakout over the previous highs here at 15, but what did it get up to? 1650? You know, the quote massive breakout was 10% over the previous highs. So even with NVIDIA investing, with AI, all the momentum in their favor, it can only break out 10% over the previous highs. That's not very good. And now you see this price action. I mean, this is fading every day. Perhaps this is bottoming too, but I'm just not that confident that this can bounce aggressively. Compare this to TUP, where, you know, when it had that initial spike, again, remember the stock was up double, basically very similar to RX, but on the second breakout, it went from basically 2 up to 4 before coming back down. And then the third breakout went from 4 to 6. So every time it goes up 50 or 100%. So again, when looking to dip buy, you want to dip buy a stock that can bounce convincingly. And you know, it's a former runner. And again, look at how the stocks run. Look at how they bounce. You want to play stocks that are more volatile. Also, Tupperware finished green on the day, just barely. RX could not even finish green on the day. Okay, so a lot of people were saying, come on, Tim, like this one looks like a better dip buy. They might be better fundamentally than Tupperware, but buying a stock for a bounce or a spike or a short squeeze is not about fundamentals. The most shorts who will get squeezed, the most shorts, flock to the worst companies, the companies with the least fundamentals. If I was a short seller, I would rather short Tupperware than RX because Tupperware is up on thin air and, you know, the meme mania versus RX, real legitimate company, got actual $50 million actually invested in them from the hottest company in the world. So this is what's confusing to a lot of people because people see this and they're like, okay, what should I put my money in? Like I'm going very nuanced. I'm trying to buy short squeeze stocks. I'm trying to buy stocks that can bounce. And I want to buy the worst company, the company with the least fundamentals. And that's very difficult for people to understand. This is part of the reason why I got started teaching. Early on in my teaching career, I didn't know necessarily as much as I know to explain this. I was just pissed off that people thought that buying any penny stock was wrong. And I would specifically, like I had a blog post, I remember one time, I would specifically state that I am buying a scam. And the blog post that I remember, this was like from over a decade ago, but I said why I put $50,000 into this scam. And people are just like, what? Have you lost your mind? Why would you throw your hard-earned money? Are you lying? If you know it's a scam, you should run the other way. But scams are designed to go up. I'm not saying invest in a scam in the long term. I'm not saying invest in Tupperware for a long term. And I don't think Tupperware is doing anything illegal. I just think that they have the worst fundamentals. Their business is not good. They will eventually crash back down to under $1 a share and probably go out of business. But because of that long-term probability, and because this is such a crowded market for shorts, it creates more spikeability on the way up. It creates more bounceability if this stock is going to bounce. And that's why intraday, Tupperware, as you can see, can spike 30%. Just keep this in perspective, okay? It's funny where I get people who say like, oh, I don't want to trade these speculative stocks. I don't like penny stocks. It's so unpredictable. I'm just going to invest in like an ETF or a mutual fund or a big company. And I'm just thinking, you absolute morons, do you know the upside potential, especially if you have a small account? I'm not saying put $1 million or $10 million into Tupperware, but real legitimate companies, ETFs, mutual funds, you're not going to make 30% in a month, let alone in an hour. 30% for a mutual fund in the year would make it one of the best performing mutual funds in the world. And this is spiking 30% in an hour. The difference is that mutual funds are very scalable. You can put in $1 million, 10 million, 50 million, 500 million, right? That's like the world at large. That's Wall Street. This spikes so quickly, you really can't put in that much money. And I don't think that you should. But if you have a small account and you have the right mindset and you're in this for speculative gains like I teach, you should buy 1,000 shares, 2,000 shares, 5,000 shares, and try to make a few hundred or a few $1,000s. on speculative stocks, okay? When a stock like this that's way off its highs can rebounce, respike, and spike 30% in an hour, again, I'm watching on Monday. We'll see if it can break back to 270. It very well might top at 270. And I'll lock in, 20 cents a share, just under $1,000 profit. If you trade with small size, it's not as scary. If you trade like a coward, it's not as scary. I don't even know if it's going to get back to 270. For all I know, 250, 255, this resistance from here at like 1:30 p.m., this resistance at 257 will hold. After hours, it broke to 260, but after hours, the volume is very light. So before it can even get to 275, it has to break above 257. So it's not guaranteed to get back to the 270s. And if it does get back to the 270s, it's not guaranteed to break out to the threes. Nothing is guaranteed. I'm playing the odds. If you looked at my recent, wins on the weekend newsletter, my weekend newsletter has been my most consistent strategy. And I'm locking in 5%, 7%, sometimes 10 or 15% gains over the weekend. Sometimes I don't have a trade. Sometimes I have a small loss. But more times than not, I have a win than compared to a loss. And more times than not, the win is 2, 3, 4, 5 times the size of the loss. So if you wonder how I grow my account, if you wonder how I create millionaires, it's just playing the odds. And it's not an exact science. So let's see what Tupperware, one of the worst fundamentally flawed companies, can do on Monday. If we get this kind of short squeeze price action, if it can retest the highs in the 270s, if it can break out. If not, I cut losses. I will, exit with small gains. I don't have any huge expectations or any bias here. I just want you to understand my thought process. Because again, I'm not special. None of my millionaire students are special. None of what I teach is, unique. This is just 20 plus years of experience, and I hope to help speed up your learning curve. I wish someone had told me this stuff earlier in my career instead of I had to figure it out over 2 decades. So I'll alert you based on what I see happening with Tupperware on Monday, but I think that this has more upside and specifically fast potential upside given that it could be a short squeeze. Thank you. All right, so what you just saw is a video lesson for my weekend newsletter subscribers. If you click the link below, you can join my weekend newsletter. It literally is my top performing newsletter because I have the patience of an ant. An ant, okay? When I'm in a trade, and if you're in my challenge, I'll post 2 links below. The challenge is where I create all my millionaires. That's for more intense mentoring. I'm gonna yell at you. I'm gonna assign you burpees. You might not like it, but it's good for you because that's where I create my millionaires. You choose your dedication level. The weekend newsletter is good for impatient people like me because the stock market is closed on the weekend. The challenge is good for if you're truly a dedicated student and you really want to learn, but it's intense. I have part-time students, I have full-time students. I have students where they have busy lives, they have a job, they're in school, they're traveling. They're not really sure they want to be a full-time trader. That's fine. There's so many different angles to just use the market to get better. I know some people say it's all or nothing. That's not accurate at all. You tell me in the comments below, do you want to be a full-time trader? Do you want to be a part-time trader? Do you want to start as a part-time trader and then if you do well, you learn to be a full-time trader? You can do whatever you want. We all have different personalities, different schedules, different goals. But as you just heard me say with Tupperware, I think that there's an opportunity, even if you don't want to trade full-time, but you can partake in these short squeezes with relative low risk if you follow rule number 1, which is cut losses quickly. If I'm wrong on Tupperware, if it doesn't break to 275, if it double tops at 275, I'll take 20 cents a share. If it doesn't even get to 275, I'll sell it at whatever resistance, 257. I'm going for a very specific goal here. That's the beauty with these weekend trades. I'm not going to be watching this all day Monday. I have a crazy day Monday. I'm here. I just flew in from Bali. I'm here filming this in Miami. You see this little ghetto setup. I don't even have like a desk here. We're just filming this because I'm like, I got to film this weekend newsletter anyways. I'm going to be in New York for 2 days, Miami to New York, then over to Italy for a few weeks, and then Italy to Texas, Texas to Japan for another few weeks. Like, I have a crazy schedule. But again, with this trade, it's either going to be a win right away or break even or a small loss. And because of the upside potential, thanks to the short squeeze, the upside is more than the downside. And the upside can really spike fast. Like, you can't predict news. I mean, there could be bad news and then I just have to cut losses. But if the short squeeze does play out, it can, like on Friday, it can spike 10, 20, 30% inside of an hour. We'll see. You know, I just explained it in depth, but you tell me in the comments, are you a patient trader? Are you a part-time trader? Are you a full-time trader? Do you want to be more patient? Do you want to be a full-time trader? It's whatever you want. Don't let anybody else tell you there's only one way to make money in the markets or one strategy. There's not. The more that I trade, the more that I teach, I realize that the market is, phenomenal. We live in the most exciting time in human history, not just because I'm able to give you my wisdom and my lessons that I learned the hard way, because I never had a teacher, but also because we can do this all in real time. Like, it's pretty cool. You're probably going to see this on my YouTube channel later, because it's going to take time to edit and stuff. But if you had my weekend newsletter, you would get that video, you get the alerts in real time so that you can learn every single Friday. Whether there's a good play, whether it turns out that it's a bad play, whether there's no play. Every single weekend you can be learning. And that's what I love about my weekend newsletter. Not just because it's my top performing strategy, like you're taking advantage of the inefficiency where people hear about these stocks over the weekend and they put in their buy order on Monday morning. Anybody who buys Friday usually sells into the latecomers and the idiots on Monday. I like it for a strategy, but like I said, I'm impatient. Part of the reason why I'm so much more comfortable with my over the weekend trade is because the market is closed. I physically cannot get out of the stock right now. So I take away my huge disadvantage, my huge drawback of being impatient. And I still, I sold some, I should have mentioned that I sold some after hours. If you're a weekend newsletter subscriber, you would see that I sold basically half my position after hours. It was like an hour and a half after I bought. I bought it at 250-ish. I sold some at like 256, 257-ish, just to take some off the table because I'm not sure if I'm going to have good Wi-Fi or any Wi-Fi right at the open. And this also is not an OTC play. I prefer OTCs because they don't trade pre-market. So like you can really time it. Like you can get in, since OTCs don't trade pre-market or post-market, if you were trading OTCs. Unfortunately, OTCs are dead right now. But in a past life, when OTCs were hot, I would buy a stock at like 3:50 or 3:55 p.m. Eastern. The stock market would close at 4 p.m. So I'm pretty assured that it's going to like finish strong, since I would have to analyze it all day. And then whatever, the stock gaps up or gaps down, or morning spikes because OTC orders take a little time to get filled, I would be out by like 9:30, 9:35, 9:40 a.m. Eastern on Monday. And that's why it's a great strategy for people who are busy, who have jobs, who can't necessarily sit in front of a computer all day. But every single weekend you could be learning. Weekend newsletter subscribers also have a whole archive of videos like this. This is just one video. This will get added to them. It'll get emailed to them, and it'll be archived later. Weekend video lessons, there's roughly 100 right now. So you can go through all the archives, match it up with the trades, and really start to learn yourself. That's what this is about. It's not about following any alerts or following any traders. It's learning from different strategies and partaking in them yourself. With paper trading, with small size at first, and then once you start to find the strategy that suits you and you get more experience and know-how, then you can size up later on. This is what all my millionaire students have done. So again, I'm proud to teach this stuff. Sometimes I do buy fundamentally flawed companies, not the good companies with the good fundamentals, as you saw with Tupperware versus RXRX. And it's an important lesson, I think, because the most fundamentally flawed companies, the worst companies, can spike faster, thanks to either promoters, which right now promoters are kind of dead, but thanks right now to the short sellers, who are the new promoters. So thank you, short sellers out there who are over aggressive, undertrained. I appreciate you. Keep up the terrible work. You make it good for those of us on the right side of things. And enjoy, your short gains over the long run. You're not wrong fundamentally, so understand that. And then everybody else, click the 2 links below. Either do you want to join the weekend newsletter or the challenge for more intense learning, or both. I don't think that you can invest enough time and money into your education. You do have to study. You do have to see these plays play out week in, week out. And you should be tracking it, and you start to see what is your sweet spot. Do you like higher price stocks? I mean, Tupperware is like a $2.50 stock. RXRX is like 4 times the price. I do better with lower price stocks. But you tell me what works for you in the comments. I'm curious to hear. Have a good weekend.
Good morning, Tim Sykes here, pre-market. Just wanted to go over TUP because I just sold, locked in a little over $500. Nothing huge at all, but this has been really a good example of a consistent over the weekend trade. Short squeeze. It was actually up earlier, pre-market this morning. This software starts tracking at around 7 a.m. Frankly, I wasn't up. I should have been up. It would have been nice to sell in the 280s. Instead, I didn't wake up in time, and frankly, I'm just waking up now around 8:30 in the morning. It's still a nice gap up, but there is the saying, the early bird catches the worm, and I know some traders where they wake up early and they do better. I'm 20 plus years into this. Sometimes I'm just not going to wake up early. I'll just be real with you. The more disciplined you can be, obviously the better, but life sometimes gets in the way. And if you trade for 5, 10, 15, 20, 25 years, you'll start to be like, you know what? Like, let me just take my foot off the pedal every now and then. I didn't know it was going to gap up to the 280s, and I didn't also know that I was going to fail in the 280s. And as I said in the last video lesson, it's really important that we see how it acts at this key level in the 275s. If it had gotten from the 280s and then bounced here at 275, I might still be holding it. I'm not sure if I'm going to have good Wi-Fi right at the open too. That's influencing my decision a little bit. But I'm also really just not thrilled that it can't get to this key level. It's like 275, 280. I look at it now and I was like, damn, I wish I should have woken up. Had I woken up, I know I'm going to get this question. I probably would have been selling into this drop here. I don't think even if I had been up, I probably wouldn't have gotten the 280s because it looks like it dropped pretty quick. Yeah. I mean, you would have had like 3 minutes. And by the way, like if you have interactive brokers, you can start trading at 4 in the morning. This is E-Trade, starts at 7 a.m. Eastern too. So your broker sometimes can influence things. I think it was in the 280s. I don't even know if it got to the 290s earlier. If you have interactive brokers, congrats. I have interactive brokers. I just didn't buy it in that. I bought it in E-Trade. And again, I just don't want to wake up at 4, 5, 6, 7 in the morning. Sometimes, but this is the upside potential with this strategy with, short squeezes. And then you have to be very aware at 4 a.m. Eastern is when interactive brokers starts. 7 a.m. Eastern is when E-Trade starts, and then 8 a.m. Eastern is when a lot of these other brokers start. So there's different brokers, there's different levels. It's not like huge money. I mean, the difference is a few $100s, but it depends if you want to be truly perfect, if you want to be truly optimized, if you're trading with bigger size. Even right now, it's like 267 by 270. So, perhaps I shouldn't have sold. Maybe it'll hold this 260 level. I do like the fact that it's holding, the 260s, whereas on Friday afternoon it was holding like 250-ish. So this could be the base of something bigger. We'll see how it acts at the market open. I'll try to do another video if I have Wi-Fi at the market open, just because I think it'll be interesting. Even after I sell a stock, I'm always judging. I'm like, should I have woken up earlier? Should I have a different broker? Should I give it more time? Should I exit sooner? This is all a game of adaptation, okay? People ask, like, how did I figure all this stuff out? Like, again, I've been doing this 20 plus years. Adapt. So even after you exit, or even if you miss a trade, still watch the stock. I know too many people where they miss a trade or they exit too early or they exit too late and they don't want to look at the stock because, they're discouraged by their own performance. Your own performance doesn't matter with the stock, okay? The market doesn't care how you do. The market doesn't care if you nail it, if you miss it, if you sell too soon, sell too late, but you should. And you should always be adapting. So, I'm still happy, with my little trade here. I sold some after hours Friday, as I said, because I just wasn't sure, if I was going to have Wi-Fi right at the market open. I'm still not sure. It's about 45 minutes from now. So I just play it safe. I think that this is a really good trade to show that you can trade volatile stocks and you can trade safely. I always say, trade cowardly. I'm not just talking about it, I'm showing it too. So I'll try to make another video near the market open. I'm not sure if I'll have Wi-Fi, but so far locked in some good profits. Good lesson. Have a good day. All right, one last video here about Tupperware because it did, in fact, break the 275 level. You could have held over the weekend and banked a nice 20% plus, or, wait for that breakout right here in this 1 minute candle right at the open, 275. As I was worried about, I didn't have Wi-Fi right at the open, so I could not rebuy this. I'm glad I got out in the 260s, just playing it safe. But massive squeeze up to 315. I'm really encouraged by this. I know people, when they sell too soon, they get discouraged, they get down on themselves, they're angry. Sometimes life gets in the way. I specifically said I wasn't sure if I would have Wi-Fi at the open. That's what I was worried about. And it just proved itself literally like in the first minute. So if you can, try to be there for the market open. Even if you hold a play, over the weekend and, you want to play it safe and sell pre-market. At the open is oftentimes a very big catalyst either way. It's not like a news catalyst. There was no news right here. It was just the market open with big volume. Shorts were clearly wrong. And this is what I'm talking about. Like, there's so many different short squeeze stocks. I actually did profit a little on YELLQ. This is another short squeeze stock, and I sold this one too soon just now in the 160 area. It's now 167. But these terrible, near bankrupt companies, just because they're so bad fundamentally and because there's so many shorts right now, it creates this kind of backwards effect where you get these stocks that can spike quite nicely. And that's the focus right now. I'm not great at short squeeze stocks. I only made a few $100s on Tupperware, but at the same time, I played it extra safe. I'm traveling. I'm not optimized for trading right now. I'm really, really dead on, I think, in my thinking that you guys should be focusing on these short squeeze stocks, whether you want to play safe, whether you want to try to be a little more aggressive, whether you want to be safe and then get back in. I really love this candle right here. I wish I had seen it, in real time. But if you ever miss any play in real time, you can also go back and look at the charts. Obviously hindsight is 20/20, but this is why I'm making videos throughout this trade. And even after I'm out of the trade, I specifically said, watch Friday's highs, 275, 280. It topped out here pre-market at 275 and came down to 265. Then it rebounces here. You got to recognize that this is a breakout. You got to recognize that you're trying to buy breakouts on short squeeze stocks. It's choppy. I'm not going to lie. I don't even know if I had been there at the open, if I had rebought it here at 275 and it goes to 3, and then back to 280, I probably would have gotten out in this chop fest, like from 275 to 295, best case scenario. But that's just me being overly safe, really not liking choppy stocks. If you have a wider perspective and more room for error, this was a really solid winner over the weekend. And you have to respect that. I also reviewed RXRX earlier in this video. This is a fundamentally more solid company. AI stocks are bouncing today. AAOI I saw was up huge on the insider buy. NVIDIA, which is the sector leader, is bouncing a nice 5%. But RXRX, this little wannabe AI play that's also down so big, can barely go up. So it's such a good lesson. Short squeeze stocks are where it's at, like plays like Tupperware, plays like YELLQ. The worst of the worst right now is the best of the best. Leave that comment if you understand that there are so many shorts and they crowd each other out and they get squeezed and they create great, buying opportunities for anyone who recognizes this trend and any longs out there. So congrats to everybody on Tupperware or YELLQ or, just seeing this. It's a great market again. And I'm just really pumped because, this stuff might not be an exact science, but it is predictable more times than not, as I like to prove over and over and over again. Click some links below. Check out my weekend newsletter. It continues to be my best performing, most consistent newsletter. I can't encourage you enough to utilize this strategy every single week. Even if you miss a play, even if you sell too soon, week after week, your knowledge account grows and you get better prepared for future plays. And I played Tupperware really safe, and there was more profits to be had, so I'm happy. Thank you.